let's move on to a corporate development then. And there's a lot happening when we talk about the business trusts of the real estate that are REITs. So let me welcome on the show Ramesh Nair, who's the CEO and MD of Mindspace Business Parks REIT. Ramesh, pleasure speaking to you. Of course, two important developments when we talk about your company and the sector. First, of course, the acquisition that has been announced by Mindspace REIT about the CBD assets as part of 2,900 crore rupees expansion. And the second, of course, SEBI coming in with clear guidelines of REIT inclusion and classification as equity. Both positive. First, let's pick up the acquisition bit. How is this particular CBD asset impact going to be on long-term rental yield and also the tenant profile for the company?
Great to be on your show, Nisha. So the board is given approval to acquire three office assets valued at 3,100 crores. This is a total of around 800,000 square feet. This is still subject to unit holder approval. We are planning to purchase this at 2,916 crore, which is a 6.1% discount. 75% of this 2,900 odd crores is a super premium prime grade A plus trophy asset, which is around 4.5 lakh square feet in the CBD of Worli. This is called the Ascent building. 20% of this, which is around 600 crores, is a grade A asset in BKC Annex. With both these buildings have anchor tenants, which are probably the biggest Wall Street names. Third is a small CBD asset in Kalyani Nagar, Pune, which is around 100,000 square feet. The first one asset is 86% occupied. The second and third are 100% occupied. So this is in line with our strategy to grow organically and inorganically. Worli, thanks to multiple infrastructure initiatives, whether it's the Coastal Road, the Sea Link, the Sivri Connector, the Metro Aqua Line, based on all these initiatives, it's become the most preferred CBD in the city today.
Yes.
And everyone knows how the top decision makers stay in the vicinity in Worli.
Yes.
And exactly in the center between Nariman Point and BKC.
Ramesh, very well pointed out, because the Coastal Road, Metro, all of them have improved the connectivity in Mumbai and that area very well. But the downward impact is also the construction has caused too much pollution. So we have to really look at that. But you also said that 70% of this is going to be in the luxury high margin area. Now, when we talk about the funding for this particular acquisition, what are the risks involved for the preferential issue of the units?
So it actually benefits the unit holders. We're not increasing our debt in a big way. Our LTV after this, the debt is going to be around 1,000 crores for this. LTV remains still 24.7%, which is still quite conservative, which also gives us substantial headroom for future opportunities. So a good thing for unit holders.
Right. And given the modest LTV change also, post the acquisition, is Mindspace REIT maintaining an optimal leverage strategy on that front?
Exactly. So, like I said, it goes up from 24.2 to 24.7. That's not a big one. But with this small increase in leverage, we're also going to see a 9% NOI growth. So that's quite substantial. So between the three assets, we are seeing a 226 crore increase in NOI. For our current NOI is around 2,500 crores. With these three, this goes to 2,726 crores.
All right. And also when we talk about REITs on the whole, Ramesh, and we have seen over the last 1 decade how REITs have really found their place. Do you think that the equity classification and now also indexation is going to be one of the most important milestones coming in? And tell us about how it's going to impact the shareholders and the companies alike.
Definitely, Nisha. This is going to help us get included in various equity indices. More investors means more liquidity. Better liquidity means better price discovery, leading to higher trading volumes and easier entry exit for all shareholders. This has definitely helped REITs move from a niche to a mainstream instrument. It's a big milestone game changer from SEBI. This is obviously aligned with global REIT practices, where REITs have always been a equity product. From how it's going to impact us, I think this will definitely broaden investor participation, improve liquidity. Like I said, there will be lot more mutual funds who will end up creating REIT-specific products. I think FPI allocations, HNI allocations, there'll be a lot more REIT launches after this. There will be even new asset classes coming up. So most of the equity products today, most of the mutual fund products today are equity. So I think this is definitely going to be a big game changer for us.
Of course, so Ramesh, it will improve the traction in REITs, which is a fairly newer asset class. And therefore, the rotation will also help expand its coverage and therefore more transaction, sellability, liquidity as well, which is so important for the shareholders. One quick answer, it is also the yields that a lot of investors really look at REITs for. How is the yield improvement? By how much and in how much time frame is the expectation? Because that is something that the shareholders are really keeping a keen eye on and have been very patient for many years.
Typically, Nisha, REIT provides you between 5 to 6.5% yield. One way to look at it is just looking at it as a yield product, but I think one should look at it as a total return product. So if you look at the last 12 months, if you had yield plus capital appreciation, a product like Mindspace REIT, we are talking of returns in excess of 35%. And since listing, Mindspace REIT has given a total return of around 16.3%. So I think that's the way to look at a REIT, not just look at dividend yields.
All right. Thank you so much, Ramesh. It's always a pleasure speaking to you, and lots happening in the REIT space. So we'll connect soon with you again. Thank you. All right. Moving on to an important development. The Center